So inside of the Discord, we are breaking down the buy model, sell model. The full video will be in Discord. So jump in the free Discord if you want to catch the value. And I'm continuing with the video. Immediate reaction, going lower. Do not let the power of the candle or the aggression of the candle. I mean, this thing was literally 100 points. I see. You can go back in the video. You can see it. We just immediately come back lower, take these people out. This is why I take a partial. Partial where? At original consolidation. Talked and did it in the video. And it lines up nicely with true open. Go back. And it lines nicely with true open. Come back to second stage accumulation. Then you can see it's going back getting some more orders. And then we're looking for more lower prices. Notice how we trade at that high. As soon as we take out that high, we immediately go lower. We don't even take out this high, and that's exactly where I'm gonna stop at or over in this area. After we take out this high, we should not take out this high. This high should stay in place. We can do whatever we want in this area, but we should not take out this high, and that wouldn't fit the model. We literally just keep on shooting up. Algorithm kicks in, boom, shoots all the way down, erasing all this within literally 2 or 3 candles. Back down here, aiming for midnight. Again, original consolidation, take partials, do whatever we do. I just have more confirmation that we had to go lower. I was going for midnight, and I saw ES dropping as well, so I was going for midnight. And you can see that this is a good way to get into some positions and take partials, leave partials. Notice that you don't have to let it run past original consolidation. And you can see literally on the dime, we really match those 2 lows, immediately shoot back up. Right, this is where I was telling you, aim for original consolidation representation. Like it's tipping as ICT would say, it's tipping his hand to tell you like, hey, we're in a program. Notice every time we take a high, we just keep going lower. Notice how we're taking lower. Like this, we're in a program. And it's okay. You don't have to know every single thing. I think this day in this specific trade, I saw this, but I was like, maybe we bullish one more time and saw this. And then when we saw this blast down, I realized, okay, quickly, what stage are we in, right? Where am I looking? Are we like, I didn't see this and like, oh, we in low risk sell part, right? Of the model. I'm like, okay, we in low risk sell. So I'm looking for this trade to accumulate all the way up here. Like, no, immediately I was like, oh, okay, boom. This is original consolidation. Okay, let's do a little risk sell. Okay, what model I'm in, like in real time right here. Okay, boom, let me get in right here. Stop loss above here. Why? Because I'm realizing what part of the model we're in. We're in the second stage accumulation, and that's why I think it's very important for you to understand which part of model we're in, because that way you can like apply risk in real time. Like I can see like, okay, I need to get in here and put my stop loss here. Versus if I thought this was a low risk sell, and I'm waiting for it to come back up in XYZ, or when we shoot back down, okay, I'm waiting for it to come back up. It's not coming back up because this was low risk sell up here. This was second stage distribution. Like where you just barely getting in right here is not coming back up. Matter of fact, I don't want it to come back up if this is second stage distribution. So you gotta understand what model you're in and what part of the model you're in. You don't have to know low risk sell. Usually, if you can identify where we came from and identify buy it, stop loss would go below here. Not here. I will put it below here, just giving it some breathing room, just in case we want to stab one time lower, just a wick. It can just be a wick, right? It can just be a wick, and then we just come back up. So I'm just giving it a little breathing room for that. And then, like I said, second stage distribution, we're going back up. Aiming, leaving partials. I see liquidity, but majority of times I'm taking the partials at original consolidation, partial right there, all that good stuff, and leaving it running to this is 8:30 open, and just leaving it running for maybe a high time frame. But I cannot stress enough. If I'm able to position myself below original consolidation, I'm going to take off majority of my position here and leave it running for this. This is just me again putting some more information on here. You can see this is a breaker. So since we have the breaker, this could be us accumulating orders inside the breaker, right? Bullish. This is the bullish breaker. What time did this happen? It literally, you can see right there, 1049, 1050 macro, 1050, 1110 macro right here. So time was on our side, buying here. Or if you missed it, okay, buying here and understanding that it's not gonna come back here, right? Some people will be like, okay, boom, I'm looking for a buy, and you waiting for it to come back here. Understand the low risk happened here, so I'm not really wanting this first stage of distribution to pull all the way back, right? You don't want it to pull all the way back. That's not this position, you know. I mean, that's not, this is part of the model. This part of the model should be respecting, you know, aura blocks on the bullish side of the curve, and only time we should be going lower, I mean higher, excuse me, going lower, is to take out people, stop out people, and then we rejecting that. Take out people, we rejecting that. Take out people, we rejecting that. You see what I'm saying? Like, you can see, like, all of it, all this is like signs of bullishness and a bullish program that we're in a buy model. That's what it means by a buy model. It means like every time we take out a low, we should be immediately going back up. Aim for original consolidation. This is, again, I cannot stress enough how important to put this idea in your brain, to be like, hey, why is this so important? I need to understand what part of model I'm in. And we can see, like, we just had this model given to us on a lot, and you will see, and really complex theory of this is this: these models happen a lot more even on lower time frames. Like right now I'm on the 1 minute, so I do see a lot of them today on 1 minute day trading. But if you go down to 15 second, 30 second, you see a lot more of these being played out majority of the day within macros. Don't want to get too crazy about that. Probably a more complex example, because you need to know what you're still doing on the high time frame. But these models are getting played out every single day, whether on the 1 minute, on the 15 minute, on hourly. They just obviously happen less on the daily, right, or less on the hourly, right, because you need more price for it to happen. So this is where on the 1 minute day trading you kind of get a better, a contextualized information and be able to just see what you're looking for in real time, and just study this. I can't say nothing more. Study this, because it would help you so much understand what model you're in real time. Hope